President Trump has reignited a trade war between the world's two largest economies. The European Union, he says, could be next in the firing line. EU leaders, including Germany's Olaf Scholz, have vowed to retaliate should the White House impose tariffs on the bloc. Now, such a move could inflict a serious blow to the continent's biggest economy with less than 3 weeks until the German election. Now, over the next half an hour, we'll hear from major players in German trade with special coverage from the port of Hamburg, a key trade hub for Europe. Well, Bloomberg's Oliver Crook is there for us. Hi, Ollie.
Yeah, Francine, thank you so much. Yeah, we're really at sort of ground zero for European trade and trade within Europe. The biggest port within Germany, the port of Hamburg, which has been around a very, very long time. The story goes that the area was first granted tax exemption by the Holy Roman Emperor Frederick Barbarossa, and they have the precise date for this, May 7th, 1189 AD. And has been a major thoroughfare for trade in Europe since the medieval period. It has a major role in the German growth story of the last few decades. It's really that international trade that has brought all of that wealth to Germany. The German model for many years has been based on globalization and free trade. And this, as of this morning, is seeing one of the biggest shifts in that paradigm in a very, very long time. So I'm very pleased to talk to some of the people that are actually building this sort of intricate trade network across the world. We're joined now by Axel Mattern. He's the Port of Hamburg's External Affairs CEO and Marketing. And basically, your function is to go out into the world and try to get people to bring their goods into Germany through Hamburg. I'd like for you to just sort of, set up for us the importance of this port for Germany and for Hamburg and the area more broadly.
Especially, of course, for Hamburg. Of course, it's part of the genes of the Hamburg's inhabitants and government. But the importance for Germany and especially also for whole of Europe is vital. Vital for trade, vital for trading with all the international partners worldwide. And you can see it from the services which are going from Hamburg into the whole world. So, of course, led by Asian trade and then followed by US trade. But you can reach every corner of the whole globus from Hamburg, port of Hamburg by ship.
And you mentioned Asian trade and US trade, and as of this morning you have a trade war between China and the United States, and 1 in every 3 of these containers behind here is coming from China. When you see the last 48 hours, as you have from the United States, from Donald Trump, what do you make of that? How does that sort of impact the way that you're thinking about your business?
From the port perspective, we are usually not reacting on a day-to-day basis. So whenever it's happening, and we see what he did, Trump, he raised some taxes and then he dropped the taxes down again just in the last 48 hours. So we are quite reluctant on that part because we are more on a long-term basis looking on international trade.
So talking about that long-term basis, what are the things that are going to grow, that are sort of the growth engines for you, and how are you trying to grow and sort of develop this port to be something even bigger?
Yeah. So as a port, you have to invest in infrastructure. And this is quite a lot of money you have to invest for a very long time, like 30, 40, 50 years. You have to make the port more efficient, and especially in Hamburg, it's very interesting because you have a port which is just in the middle of the city, surrounded by the complete city of Hamburg, and we have no possibility to grow. So we have to do more efficient, more effective operation of the port activities on the given ground. So that's our main concern, to be perfectly prepared for whatever happens in the future.
And when you're trying to grow these markets, you're traveling around the world, you're traveling to China, you're traveling. So what are the sort of most promising markets for you? Where do you think we're going to see more exchange between Germany? Is it going to be potentially India? Because we know there's the de-risking strategy from China.
Yeah, that's right. So India is the most rising market these days, so it's very interesting for us. I mean, it's a huge country and there's a lot of activities, but you can't compare it right now to China, because China is still by far the biggest trade partner from the port of Hamburg, from the port perspective. So 1/3 of the containers are being handled in the port of Hamburg are coming from China or going to China. And so, but US market is quite interesting and it's a market which is connected to Europe since the trade started.
And then also some of the things that you're trying to develop here is the types of trade, the types of cargo that you can take. For example, hydrogen is sort of looking into the future, potentially more on LNG. What are you looking to develop in terms of the types of cargo you can accept here?
So that's a very not a difficult question, but you have to put that you have to define it a little bit, because the hydrogen and methanol and ammonia market is divided in two parts. You have the market for serving the ships with fuel, for example, and then you have to import a lot of these derivatives for the country, for energy perspective. And that's something where we are preparing the port very and on a sustainable way. We have a lot of industry which is gone by now. For example, mineral oil refineries are gone, so we are trying to refurbish the whole area in the port for hydrogen.
And we're just a couple of weeks away from the election here in Germany. What do you need from the next German government in order to continue to make this a prosperous location?
The promise that the government is investing in infrastructure. That's for us the most important thing, because infrastructure is the most important thing we need as a port, because the infrastructure is guaranteeing for us the connection between the port and the clients and the industry.
And when you go into this election, the party that is the second strongest within Germany is one that is certainly has a very anti-globalized sort of perspective, I think it's fair to say, and is already affecting the debate, even if they won't get into power. What is your message to sort of the German people if they are sort of concerned about this sort of future prosperity and the place that trade holds in that with a party like that coming in potentially?
So my message would be you have to vote for democracy and not for the right wing. That's even worse, going for trade, for whatever is important for the German inhabitants. I mean, we are in a democracy and we need to keep it, and so we have to vote for the democratic parties.
Well, Axel Mattern, thank you so much for your time speaking there to the Port of Hamburg External Affairs CEO and Marketing, and really going out and building those relationships in order to bring more and more of these containers into the German and European economy. But up next, we're going to be speaking with our exclusive interview with the CEO of one of the world's largest shipping companies and why he thinks that the U.S. tariffs will only have a limited impact in the short term. This is Bloomberg.
Welcome back, everyone, to our special coverage of how Donald Trump's tariffs could actually impact Germany, Europe's biggest economy, which goes to the polls in just a few weeks. Now, as the U.S. and China start a new trade war, EU leaders have been scrambling to avoid their own trade war with Washington. The German Chancellor Olaf Scholz says Europe has the capacity to react if Trump follows through. But what's the view on the ground? Let's return to Bloomberg's Oliver Crook at the port of Hamburg. Hi, Ollie.
Yeah, Francine, I mean, listen, this is absolutely critical to the German economy and more broadly because, you know, more than 90% of all goods that are moved around the world are moved by sea. And one of the companies that is principally involved in that is Hapag-Lloyd. They have about 10% market share in all of the container traffic across the world, shipping them all over the place. And we spoke with the CEO yesterday exclusively, and he told us why the U.S. tariffs could really have a limited impact in the short term, but long term could really do some damage to the sort of global picture, particularly if there's a step towards deglobalization. Have a listen.
Well, in the end, of course, it's not totally unexpected, as it has been announced already some weeks ago. I think in the end, the effects on global trade will probably be somewhat limited. I think especially the 10% on China will not do all that much, also because we've seen a recent appreciation of the US dollar anyway, compared to many currencies. So short term, I don't expect to see a lot of effects from that, but longer term, of course, tariffs are never good for global trade.
And do you think that, you know, so you say probably not a reduction of volumes. Do you see trade reorienting as a consequence of this? Have you been speaking to clients over the last couple of days? What have they been sort of saying?
I mean, in the end, I think trade normally finds a way. If you look also at the first period where Trump was in power, there were quite a lot of tariffs, and there were actually also under the Biden administration. And what you see is that trade flows then typically shift. And we've seen less volumes from China, but instead we saw more from Southeast Asia and also, for example, from India.
And do you think that you could, as a consequence of this and sort of maybe the relationship with the United States getting a bit more strained, do you think you could see those volumes from China increase? Into Europe, that is?
Could be. I mean, China will continue to produce, yeah, and then we have to see where those goods are going to go. I think that's always, it's always difficult to predict what's going to happen. In the end, though, I think the U.S. administration will also want the American economy to grow. And if the American economy grows, then they will also need to import goods, because many of the things that are being imported today will not be manufactured in the U.S., also not in the foreseeable future.
Have you modeled what tariffs on Europe would do to your business and to volumes here?
It's always very difficult to predict that, because, as I said, there's also the FX effect. And in the end, normally we see that the effects of tariffs are less than people predict.
And then in terms of the question of the broader question, because you mentioned this and sort of stepping back, there is certainly a trend, it seems like, of deglobalization and wanting to sort of move production within sort of borders, within sort of blocks. Do you think that that can put a cap on your growth longer term? How do you see that playing out?
If you look at what's been happening over the last couple of decades, then we've seen that the multiplier of GDP has come down when you look at global trade, but global trade is still growing. Even if you look at the last 5 to 10 years, you still see on average 3 to 4% growth. Some years it's more, some years it's less. I think if we look at 24, then the market certainly surprised to the upside. So I do believe that this long-term trend of seeing maybe anywhere between 2 and 4% growth on an annual base is still there. And of course there will be bumps in the road. But the longer-term trend, I believe, is still intact.
And in the context that we've seen from the United States, are you looking at different markets for growth? Are you hoping that that's sort of where the 2 to 4% comes from will be different over the next couple of years?
I think when you look at the trades, of course, not all of them are going to grow at the same pace. But I think that, for example, when you look at markets like India, but also Africa, they will certainly grow above average. And of course, in return, you'll see some of the trades to and from Europe and possibly also to and from the US may grow a little bit less.
I'd also like to get your thoughts on the German economy more broadly. Obviously, Hamburg is a huge part of the sort of trading story within Germany, which has been a huge part of the wealth creation within Germany. In terms of heading into this election after 2 years of stagnation in the German economy, what do you think? What would you like to see from the next government, no matter who it is, in terms of supporting the German economy? What do their priorities need to be?
Well, I think it's very important for the German economy that we get growth going again. I believe that's also where most of the parties are united. And of course, that means that you have to take all kinds of measures to ensure that we remain and become again even more competitive. Germany has proven in the past that they can do that, and hopefully they'll be able to do it again over the next decade.
And they're the thoughts from the CEO of Hapag-Lloyd, one of the biggest shipping companies in the world, based here in Hamburg. Also based here in Hamburg are the Hamburg Chambers of Commerce, which are actually the oldest in Germany. They've been established back in 1665. Today, they represent more than 180,000 businesses in the region. And I spoke to the CEO a little bit earlier, who told me that he's quite pessimistic after President Trump Sunday said that the European Union could soon be hit by measures. Remember, those are potentially 10% measures coming in against European tariffs. Have a listen.
It's hard to actually calculate what is the impact. It's going to be a bad impact, and also we put other tariffs from the European Union. This is all we need, more free trade as a destination. But to see our economy in Germany is lacking of competitiveness in international regards. Yeah? So we have too much bureaucracy, and energy prices are too high, and all things like this. Tariffs making exporting goods more expensive. So we need to reduce anything and to train our competitiveness.
That the Hamburg Chambers of Commerce there. But coming up next, what tariffs could mean for a German economy already on the brink and how the next government should respond. We'll discuss that next with the German Marshall Fund. This is Bloomberg.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word.
As the United States and the EU square up to what could be the next front in Trump's trade war, at risk is the biggest and most integrated bilateral trade and investment relationship in the world. There's no free trade agreement between them, but operating under WTO rules, they enjoy some of the lowest tariff rates anywhere, at about 3%. The EU and the US trade about 850 billion euros worth of goods, with Europe running a surplus of about 155 billion. Meanwhile, trade in services was worth almost 700 billion, where the US runs a surplus of about 100. Combined, the exchange of goods and services was bigger than almost every single European economy on its own, at least for now.
And remember, again, the word tariff. We're going to protect our people and our businesses, and we're going to protect our country with tariffs. According to Goldman Sachs, a 10% minimum tariff would reduce EU exports by about 150 billion euros every year, shaving off about 1% of European GDP. And Germany would pay the highest price. Germany's effort to de-risk from China has meant the trade relationship with the United States is more important than ever, and new tariffs by Donald Trump could cost Germany 15% of its biggest export market.
So the potential that the impact that Trump's tariffs could have on the EU and how Germany is hoping to could be paying the high price out of all that, particularly as it tries to de-risk from China. The emerging trade war between the U.S. and China leaves Germany trapped between its two biggest trading partners, and that could spell more bad news for the economy that has already contracted for 2 consecutive years. Let's bring in Sudha David-Wilp, who is a senior fellow at the German Marshall Fund. Thank you so much for joining us, Sudha. And I'd like to just begin with your reaction to the last 48 hours of what we got out of Trump and the ominous signs that we're getting about what we could be getting next for the EU, and basically how the German government and potentially the next government is going to be viewing that.
Thank you so much, Oliver. Good morning to you. So if we start with just the immediate reaction about the pause in tariffs on Canada and Mexico, I still think that Germany and its European partners still see the fact that President Trump is so insistent on implementing tariffs as a harbinger of things to come. And Germany and Europe has certainly prepared. There's a list of retaliatory measures that the EU can put into place if tariffs do come about. But I think Germany, as Europe's largest market, has been seeing the writing on the wall for quite a while. It is caught between the two economic juggernauts of the United States and China, and the United States even being protectionist under the Biden administration. But tariffs, of course, take it to another level. And then, of course, dumping measures on the part of China and putting Germany's automotive industry in a very, very difficult place. So Germany is trying to find its place in the world. It's known as the export powerhouse and has built its reputation, it's built its power on globalization and open trading markets. And that model is not current at the moment.
And do you think that this latest action by Donald Trump, obviously the message from the German government for a few years now has been de-risk, de-risk, de-risk from China. Do you think that this could change that at all? Is there a silver lining anywhere here for Germany and Europeans to maybe say, hey, listen, we're open for business and we can actually be the beacon of global trade?
So many European policymakers, and here in Berlin, and of course, Germany is in the throes of an election campaign, and we can talk about that in a moment. But I think there is a certain amount of resignation that some sort of tariff will come, but also many think that it's perhaps an angle for negotiation. And Europe can respond and say, look, we will counteract any tariff by A, B, and C. But at the same time, we can spend more on defense and make sure that our Euro-Atlantic common interest threats are addressed jointly. We can buy more LNG from the United States. We can do more to reconstruct and keep stability in Ukraine after President Donald Trump figure out a way to solve that conflict. So I think there are definitely ways in which, or avenues in which, Europe can talk to Donald Trump and persuade him to perhaps forego the most draconian tariffs. But I think there is a resignation that the world has shifted and there is more industrial policy coming from China and coming from the United States. And Europe may, at the end of the day, always choose, also think that they should play China and the United States off of each other if Donald Trump pushes too hard.
Yeah. And I want to just get your thoughts very quickly on kind of the latest developments within the German election campaign. You had probably the most kind of significant development over the last few days with Friedrich Merz sort of voting with the AfD and then backtracking, and then the measure didn't even pass. I'd like to get your sort of analysis of how that is going to play in this election campaign. I have to say I've been pretty surprised that so far the polls have been basically unchanged.
Yeah, the polls have been quite stagnant, even since, after the holidays. The AfD, the far-right party, has been consistently getting 20% of polling, and the CDU has been hovering at 30% or a little bit less. Now, conventional wisdom says that Friedrich Merz will be chancellor, but because of his move to put migration on the forefront of his campaign last week instead of economic competitiveness, something that Brussels has also been stressing and that many business leaders and policymakers see as a very vital issue for Germany moving forward, he decided to align with sort of ideas from the AfD and go maximum on terms of migration in Germany, knowing that perhaps this would only go through with the AfD, which it did not. The motion passed, but the law did not pass. But now Friedrich Merz is trying to pivot and put economy at the front of the campaign. And we'll see what happens. I think we still need a week or two for Germans to digest and understand sort of what happened last week about the CDU allowing itself to align with the far-right party for the first time in post-World War II German history.
Right. Well, Sudha, David-Wilp, thank you so much from the German Marshall Fund. And that's really it from Hamburg here. Francine, I'll hand it back to you.
Yeah, we continue to focus, of course, on Germany. 9 a.m. UK time on Thursday, a conversation with some of Germany's most powerful chief executives before the votes are cast. And that will be with Tom McKenzie in Frankfurt.